Live from Music City, Nashville, Tennessee, this is your motivational, sensational, inspirational, educational, keenly awaited, highly anticipated edition of The Trading Floor with your humble hosts, Andrew Barbosa and Jeremy Alexander Newsom, with another daily dose of mentally delicious brain food, reminding each of you to love life, live life, and trade it. That's my DJ voice. Traders from around the world, what's up? How's it going, Simo? Hope you're doing fantastic. Rob's in the house. Liz, Eric Newman, how are you? Bill, he's all pumped up about his first solar position. Man, so who was that? That was me, man. That was me. All right, let's talk markets. Today is Finance Friday. Upcoming Monday, is meaning the Monday of next week, is the first Monday of February. It's the first trading Monday of the month, and you guys know what that means. Mentorship Monday in the house. So we'll talk about what we're going to discuss next week. These are what we got for today. This little list, plus a few others. We'll go check those out, but let's just go through the general markets really quick and kind of cover all of what's out there. So I'm pretty happy about this trigger, not going to lie. Had a really good bearish candle on the 27th. I wanted to go bearish. I was all hyped up for it. Today, the day after, looks like the FOMC meeting, or not FOMC, that was Thursday. Looks like we were going to trigger at some point, but didn't. And then today, let me see if the headlines are still here. I'll try to remember them, but I don't want to misquote. But the GDP numbers came out today. Nope, apparently it's not here anymore. Same exact picture. Same picture, but different headlines. Anyway, I'll give you an idea of what the headline said. It said, GDP down, which is good because interest rates might not rise. I laughed about that for about a solid 3 minutes because the GDP numbers came out today and they were not good. And Japan introduced negative interest rates, and that caused the market to surge. Also not a good thing. So it was just an interesting news headline because, I don't know, it's like kind of saying, hey, honey, we're going to sell the house now because we can't afford it, but thankfully we can get another mortgage and save on a lower interest rate, and our mortgage won't be the same. It'll be lower. It's kind of like what? GDP is lower, so we might not have to raise interest rates. I was like, that doesn't make any sense. Anyway, so the market was bullish today. And it was a very bullish gap, without question. So what could this be? Well, it could be a few things. It could be something similar to this. We can see some similar candles, and we could still get this little, I anticipate a little bit more of a sell, and then maybe a bounce. That's the part that I just don't know what happens, that second bounce. But notice the volume profiles here. I mean, these volume candles are more bullish than anything else except for back in August. I mean, these are some serious August volume candles. So yes, this could be like an ABC wave of some kind. Could be a wave 4. We're getting really high to like the point where I just have no clue what the heck's going on. If we break the 13th candle, the high of the 13th candle, which is 190. Yeah, so if we get into 195, which is really not far to go, another $1. If we break that or close above that or something on Monday or next week, I'll just be scratching my head and saying, who knows? Who knows? So if that happens, I will say, and go ahead and get ready for it, there will be a little bit of a decrease in trading in February because it'll be so neutral. I'll be neutral long term. I'll be neutral short term, and I'll be neutral medium term. I really would just be totally waiting for something. The SPY, let's not forget, this was a retest gap right here, and this can retest. So we could trade all the way back up to here, right when people finally go bullish rather than going bullish down here, and then it rolls over. That's a possibility. Probably kind of my favorite plan of what likely will happen, but it obviously doesn't have to. A very, very strong support. You guys remember that I'd mentioned I was going long in some of my longer term stuff down here because it's just a buy low, sell high. Long term, I'm neutral. Short term, I was bearish. Just didn't get triggered into a lot of bearish trades, and that's really the SPY. And that's kind of what it looks like. Here's the DIA, and the Dow Jones ETF did bounce very cleanly off its 200 simple moving weekly, which it's done before, and you got a morning star reversal on a weekly chart, which is strong, ladies and gentlemen. That is strong. So can we bounce here? Ladies and guys, this is a place where we can bounce. I mean, we're here. We're at the support. The market doesn't have to just absolutely cataclysmically tank. It might, but it doesn't have to. There are a lot of ETFs out there that have confirmed bearish, at least in my opinion. And I am in bearish or in some bearish positions on them. So here's the IWM. So the IWM today closed at 103. I am in a 106, 107 February bear call spread on the IWM, which is above the 200 simple moving average on a weekly chart, which is at 105.30. I think we're going to get pretty close in there. We might actually trade up into that and maybe pierce a little bit and then kind of roll over. So that'll be interesting to see exactly what that, how that plays out. But here's your daily. Very nice candle, nice little pennant, and that was a pennant that was going to break in either direction, and it just broke bullish. Simple as that. So here's your exponential moving averages on the daily chart on the IWM. We haven't traded to the 20 yet. We haven't traded to the 50 yet. So we're going to experience, I would assume, a little bit of slowdown at some point on one of those. Here's your XLE. Also got into an XLE bear call spread today. So again, these are retracing. These ETFs, they are in a retracement. Here's your weekly chart. We anticipated this retracement, and the 61.62 is right about there. And again, below trend lines, nice little morning star type of pattern, but we're retesting a very, very strong support from the bottom. And it'll be interesting to kind of see how it plays out. As far as a wave count, this could be a 1, 2, 3, 4, 5, A, B, C, something like that. So a little bit of a pullback. We'll see. We anticipated it and expected it, and it's kind of happening at the moment, and we'll see what we get overall in the general broad market stocks. But you probably will see in February potential decline on some, just the amount of trades. January, even though it was one of our most profitable day trading months, we only took 40 day trades. And even our swing trades, we didn't have that many. It was a profitable month in January, but didn't have that many swing trades either. And I'll be looking at a few of those today. But that's kind of my overview on the broad market. We could get into a place where really I'm just going to be so neutral, waiting for whatever to happen. I'll be super, super patient. Because if we're neutral, we don't really have a lot of an edge. And if we don't have a lot of an edge, we shouldn't be trading directionally. And if we're not trading directionally, that's where options come in. And we could sell them and maybe bring in some premium and just be really patient. So get ready to put your patient hats on, because it's going to be fun. Questions, concerns, thoughts, or opposing allegations overall? Man, water is good. So good. So good. You got solid? All right. Let's do this. Let's pull up our swing trade list and go through some of the swing trades. We did get stopped out on one of them today very quickly. Was UAL. So here is UAL. And UAL gapped down, triggered our entry in the pullback, and stopped out pretty much just within an hour. So boom, we're out. That happened pretty quickly. So UAL, we are out. Boeing, ticker symbol BA, looked at that yesterday, and it did breach our stop very nicely. So we can cancel Boeing. Boeing is canceled. Great job not getting triggered into that one, folks. And we will come back to that at a later time and see what we can do and how that might work out. I'll leave that trigger down there for a possible setup. Move the stop up here and just kind of wonder if we're going to pull back a little bit higher and maybe limit sell off of that gap. But again, ladies and gentlemen, strong bearish gap, but it is at a support. So if we break through, it looks like we're kind of breaking through this high. If you're saying to yourself, is this a good time to go long on Boeing? Yeah, it is. I mean, numerically, based on support, it's at a really strong support. Based on the gap, though, it's just going to take some, not necessarily nerves of steel, but a quick trading plan. So kind of in and out in hours or short days. Because here's your hourly chart. And again, just a really good bounce off of that support right there. Really, really pretty. And just trade up a little bit. So now you're at this high. Looks like we're breaking through the high of Boeing. So could we fill this gap a little bit? Absolutely. Will we? I don't know. But canceling the bearish trade. And if you want to go bullish here, kind of like as a switch stop, and now that's your stop, and it fills a gap a little bit, I understand. It makes sense. You're out of support. Why not? Boeing and Intel is the other one that we still kind of have open. Here's Intel, INTC. And we're going to cancel that one. Again, could have been a bracket trade. Broke through 30.56 very nicely. Did not close below 29.11. And as I mentioned when I first posted this could be a bracket. So if you took it bullish on Intel, bouncing off of that support, I understand, and I can see why you would do that. Buy low, sell high, right? $29.50 was a very, very strong support. Didn't close below 29.11, so waiting for it to bounce, and we will see what happens. So Intel, really kind of a cute gap, solid volume, good location, bouncing off of that support. Our bearish swing trade, we will cancel that one as well. And at this point, we have 3 active swing trades, and we're going to exit one of them next week for probably a little bit of a loss at some point. QRVO. So QRVO has earnings coming up soon. You're kind of forming a little bit of a bearish pattern. Yeah, we'll exit probably for less than an R loss, which is a good thing. If the trade's not going to work, trade's not going to work, I guess. That's that. Mobileye up a little bit. This is one of the few trades that's working at the moment. Bearish swing trades, one of the ones that we've been in for a little while. We have an entire month left on Mobileye, so even if the market does retrace some, the stock did make a lower low, and I'm not going to be afraid of it retracing, coming into some moving averages, and failing those moving averages potentially. So today is kind of a nice little inside day candle. The trend is still bearish, and hopefully it'll continue and press it down into our target. But right now our stop, which is a 1R loss if we're wrong, is very nicely above the 20 EMA. So we can give that a little bit of time. Again, earnings an entire month away, and just kind of take it from there. So that's Mobileye. And let's start off, last but not least, Bank of America. Bank of America, if you didn't get a chance to get in, today was definitely a retest. So I still got that set up there. It's going to get a little wild. And if we trade into the stop, I will mark it down. But man, if we trade to that stop, if we break through that stop, I will be pretty surprised. I'll be pretty surprised. It was one of my favorite trades in a while. And yeah, if we just crush that stop, I'll be impressed. I will. We'll see. I don't know if it's going to happen, but here is Bank of America on a weekly chart. And on a weekly chart, moving averages, they've crossed bearish. We broke through. We could trade up here, trigger the protective call trigger, and then roll over down to our target. But anyway, Bank of America still in. Kind of unprofitable at the moment, but not massively. And our stop is still above the 20 and above the resistance, so we'll find out. That's what I got on those swing trades. So we get a chance to see if there's going to be other good swing trades out there. Bank of America. There we go. Let's go look at Visa and MasterCard. Visa and MasterCard were absolutely on my list today for a day trade. Mostly MasterCard because it gapped a little bit better than Visa. But just didn't get a chance to trade them. Bearish at least. So Visa, really good volume. Really good candle. Looks a little bit like a double bottom right here. And it is not above the 113 candle, which is right there. And that's kind of the 100 simple moving average. But based on that candle and that volume and the double bottom, what I could consider doing is if we pull back to here as a limit buy, I don't mind going bullish. Like I mentioned, guys, I'm neutral. I mean, if the market's going to bounce, it's going to bounce. I'm not afraid of a bounce. Here's the weekly, and man, look at that candle on a weekly. I doubt there's going to be any money on Visa on a put sale, but that's what I'm considering. Might hop into the hourly and see if there's any good hourly trade set up. Let me just come all the way down here to February 19th, which is the third Friday in February, and see if there's any put sale premium anywhere down there. There's some down there at 70, which isn't super far away. Here's the daily, and 70 is in today's range even. So there's nothing down at 60, 66. 66, you get 11 cents. 64, you get 7 cents. I do like 64, but you get 7 pennies. All right. Let's hop in here to the hourly chart on Visa. And the hourly chart, again, good gap on Visa, broke above. So that would be the limit buy. And really a stop would be right about here. So $4 risk on Visa. Here's, again, back to the daily chart. We look a little bit like this. We've broken through the 100 simple moving average before. We could definitely do it again. Here's a just candle view, version of Visa. And you can see we are kind of slightly making higher lows. It is a double bottom. It is a bullish candle. Volume did increase. If you're looking to play Visa, that's how I would personally play it. Buy it on the pullback and trade it back up into here, which is a 1 to 2-ish risk-reward ratio on Visa. Here's MasterCard, and look at the candle on MasterCard today. Man, gapped down. So this morning I was looking for a bearish play, but just never got it. And it just kind of kept climbing all afternoon. Really good move on MasterCard. Ginormous bullish engulfing candle. Really, really strong. Huge volume. Some of the best volume we've had in a long, long time on MasterCard. And guys, that's not bearish. I'm just throwing it out there. Like, unless we take out the low of that candle soon, that's a pretty bullish signal on MasterCard. Quite a bullish signal. A lot of volume. Unless MA takes out the low of this candle, and soon, MA will likely move higher. Rob says, is this a dead count bounce? I don't think so, man. I don't think it is. I'm going to say no. I do not think so. How high will the bounce go? That's a good question. But I don't know if we necessarily make new highs from here, like in the market or in the individual equities. But I will not be surprised if we do. There are a lot of bullish signals out there. And if I'm buying anything, it's a stock that is at a strong support with good volume and good candle. And MasterCard is a thumbs up on all of those. So if you're looking to play MasterCard, I mean, unless we get just a big gap down Monday morning, something like that. I mean, it's not up huge today, but 6%. So if we retrace a little bit and then bounce, so that's kind of my thought is if we pull back just a tad and bounce next week, I think it'd be a pretty viable event. So really impressive volume coming in on both Visa and MasterCard. Let's go check out FAS. And FAS, which is the 3X financial bull. There you go. FAS also out of support. It did make a low. So here's the low on FAS right there. Nice high wave candle, and we're breaking above this level. What's interesting is we haven't had a long-term retest of this pattern, and if it really is a smaller triple top, we could come back up into here, and that is finally when people will probably go bullish once we've cleared all the moving averages and everything. And if we're going to roll over, that's probably where it'll happen. You know, if the market is for real in 2016, if we're going to get the crash that all the perma bears want, I don't think that the bears are not going to make it easy. And it will likely trade up into locations where people want to go bullish, and then some rollovers going to occur. So in my imagination, down this level, I'm thinking to myself, I'm not afraid to go bullish by any means. Just do it quickly, short term, just a week or so in and out, and make some bullish money on some pullbacks. So here is today, white candle, white candle, white candle, a lot of bullish candles. It's a little bit of a pullback Monday, Tuesday, buy that bounce, and look forward to trade up a little bit higher potentially. And probably could make it up into here. Again, if it breaks that 113 candle, I'll still be impressed, but it could. Market's not going to listen to me. And if it trades up a little bit higher, breaks through the 50, and then people are like, all right, sweet, now I'll go bullish. So it'll be up in here. And then if it's going to roll over, that's where I think it's going to happen. If the market does it, it's going to happen there, just to make sure every bull is trapped before it rolls over. So I'm just being slightly cautious out there because there are a lot of things kind of confirming bearish, breaking through some supports. As I mentioned, the bigger ETFs, but I'm just kind of waiting on a few of those before I go all out bearish on whatever. So some good gaps today and some good volume. Let's go check out Wells Fargo, WFC, and Wells Fargo, another solid gap. Black candle today gapped up. This would be a nice little new white soldier. So really just find yourself the stock or the candle or the gap that you like a lot. And, it's a new white soldier. So if they make some higher highs and they pull back a little bit, you don't have to be bullish for long. I do want to pull back, but Wells Fargo actually, kind of wish I saw this one. There was just so many gaps out there today, I couldn't track them all. But I love this little pattern of Wells Fargo. Check out this hourly chart, guys. Look at this. So gapped up. Here's your resistance right there. We gapped up to those levels. Anyone who went bearish the last 2 days are trapped. I just love these little dojis. I believe both of those are perfect dojis. Both of them. And that's interesting because trigger would be there, stop would be there, and that would have worked out pretty well for a day trade. So, yeah, Wells Fargo, there's the daily charts, and I mean, really, it's going to be kind of similar to everything out there. A little bit of a pullback tomorrow if we get it. Tomorrow being Monday, of course. Limit buys. So very similar to the Visa setup is just kind of let some pullbacks occur if it happens on Monday, and if you buy some of that bounce, I really like today's gap. And I think the gap that started the whole thing was the 21st, the 22nd of January, right? You got this morning star reversal pattern, strong morning star, had a big gap up the next day. It was definitely bullish on the hourly. We pulled back, and now we're bouncing. So even if it is an ABC wave, we got ABC to go, and it's just be interesting to see how high we come up. Santa, did we lose sound? I don't know. Testing, 1, 2, 3. Can you guys hear me okay? Definitely a possibility, Stan. He said, just came back. All right, great. Appreciate it. Let me know, though, guys. Thank you. So Wells Fargo, again, just to kind of reiterate a lot of what's going on. Ladies and gentlemen, this is a really strong support. I agree fully. There's trend lines and support zones and all kinds of things we got to break down before we're going to go bearish. There's no reason to always be the perma bear on a long-term level. I mean, boom, buying opportunity. I'm just going to be kind of quick about it because I do know that this shouldn't have broken down bearish, and it did. So there will be a megaton of resistance up there. So if I'm going bullish, it's just going to be exiting a lot up in that area, right in there on the markets. Citigroup, ticker symbol C, as in cardiovascular. Citigroup is another one that, kind of like Bank of America, without question broke a very key support. And this is a tougher stock to chart because it has all that 2008 garbledygoo back there. But here is your... Well, here is a support resistance level on Citigroup, this 45. I did a lot of put sales, a lot of buying on Citigroup back in that 45 range for a while. And there's a trend line right about there from 2008 lows. So we got that, and we broke through that on Citigroup. So Citigroup, again, one of the few that, kind of like Bank of America, definitely with volume took out some really, really key levels. So it depends on, and that's why I'm just kind of like shaky on some of the stocks, because they did make lower lows, they did make lower highs. It's the definition of a bearish trend. So this retracement, you can go bullish on it, just be quick about it. And then short into strength. There we go. So it'll be interesting to see exactly what goes down. Questions, concerns on Citigroup? You guys good? All right. I mean, look at that. Look at that volume too. That volume is for real. All right. Wells Fargo, Citigroup. We've looked at Bank of America, Boeing. We've looked at that. Capital One Finance, COF. Capital One. What's in your wallet? Nothing. Here's Capital One. And let's again look at this one. Another stock that really did take out some really solid supports. And interestingly enough, let's do a line chart representation of this. And let's just oogle over Capital One for just a second here. Type in a 1 if you see some similarities. So this is the weekly chart. Again, that's why I'm just kind of like, okay, Capital One, Bank of America, some of these other banks out there. I mean, it's just, when I say dead cat bounce, I mean, or when Rob asked about it, I'm not saying that we can't go low, we can't go lower, we can't go higher, but I just think this is a retest on some of these. Make this smaller. Because there are some of, again, the financials, there are some warning signals out there. Some of the banks, some of the ETFs. Japan with negative interest rates, I mean, that's not a super positive thing. I mean, literally, it's negative interest rates. Head, shoulders, knees, and toes. So retest on head and shoulders. Retest on head and shoulders. Question mark? Man, look at the similarities of the prices. What? Capital One Finance 2008 similarities. I think I posted that. I spelled that one wrong. There we go. History doesn't repeat itself, but it tends to rhyme. We shall see. So XLF had similar volume spikes 2007. I don't know, guys. It's going to be super interesting. I mean, look at the retest levels, guys. So the retest came down about the exact same price point. It's almost eerie. So what's cool is this broke above. So let's go back really quick to just see candle version, how high this retest came. And this retest did break the neckline just enough to flip, to scare everyone a little bit. Thinking they were going to go bullish. And then, bloop! Ha ha! Psych! Alright, so let's hop over here. Yeah, just closed above it, too. Uh-huh. I think it's coming. I'm being a contrarian right now, I know. I'm contrary to some of the things I'm thinking, but man, look, 1, 2, 3, 4 black candles in a row, white candle, and a retest. That's when everyone thought the rollover was going to happen. Boom, right? Everyone's hopping on. Then bam, what's going on? Broke through, closed. Everyone starts hopping on bullish, and then zip, and the bulls get hosed, the bears get hosed because they're not in, and the smart money makes money. Hop over here. 1, 2, 3, 4 black candles in a row. We now have a white candle. I think we're going higher next week. We come up into this resistance. We get a little bit of a sell. We break through, and then we roll. I mean, come on. Type in a 3 if that's not a little bit eerie. I'm going 3 on this one because that's a tad odd. That's what I love about the market. I think it's cool. Maybe it's just me, but kind of like 2011. If it happens, I'm not saying it will, but I'll be prepared for it if it does. And I think we'll be the ones to maybe just tiptoe on a short trade up in this area if it closes above there. Rob's is 2.9. 2.9 is good enough. I can live with that. All right. Capital One. Snap. TLT. It's dynamite. So there's TLT. Last time we checked out this one was a while ago, back on this week, and is breaking out that little triangle pattern. TLT going a little bit higher up into the 127 region. The exact time we looked at it was the 15th. 115.16, which was right there. Bullish gap today, breaking out some resistance. If someone wants to trade it, buy the bounce. Boom, boom, boom. Bounce candle. 122. How do we know that? Here's the exponential moving averages, and it pulls right into the 10. That's one of those situations where you have no idea if it's going to work, but you follow your plan, you buy the bounce, and it's back up to where it was a week ago. Now we got a nice little doji, some volumes coming in. And based on that little triangle pattern on TLT, I'm not necessarily bearish. Not specifically bearish. So let's see if there's any bull put spread premium down here. And if there's not, I guess we might move on. I'm sure Justin Linderman is paying off some student loans again with the move in the TLT. Here's the option chain. And let's go look in February. I might even do late February. You guys can't hear this on the mic, I don't think, but there's a dog like 3 doors away just barking his brains out right now. I have no idea why. It is going crazy. Someone must be drowning. 121, 120. You could probably get 11 cents and probably buy for 8, so you get 3 whole pennies. What? Look out. Let's try 122, 121. 122, 121. You could probably get 19 cents and probably buy for 11. That's a little better. 8 cents for February is right about the low end of what I would like to go for, but I think that would probably expire worthless. Update. So just kind of what I'm thinking. 122, 121. February bull put spread for 8 cents looks decent. And as I mentioned earlier, if we do go later February, maybe even March, let's do March, late February 1st. 121, 120 still is not that good for February. But then March week 1, which is a little on the far side for me. 121, 120 still doesn't have that good premium, but 122's got something in there. So it could make its way closer to 122, but it's got the 20 and the 50 in the way. It's got that triangle. It's got 124 as old resistance, new support. It's got a lot kind of helping some of the bull perspective on ticker symbol TLT, which is the IE Treasury 2-1-year bond. Gold. I want to know where the gold's at. Show me the gold. Ticker symbol GLD moved a little bit after the FOMC meeting up into the high of 107.93. Gap down pretty nicely the other day. And this is a hard one to trade. I do think it's a little bit of a retracement on a longer-term bearish move, but you're getting some volume in here. And, yeah. Interesting. So gold on the weekly perspective, here's your weekly chart. We've tracked really well with the 50, and that's kind of what that longer term trend line is right there, is the 50 exponential. Here's your 100 simple, which we probably will come up to and fail. is my guess. If the GLD comes up, especially if the market's a little bit topsy-turvy and a lot of people start hammering home GLD gold, it might make it up to there. But again, I think at some point it just makes it a little bit lower. It makes sense. If the market goes down strongly and the United States dollar increases, then yeah, that would likely happen a little bit. So it still hasn't quite made it to where I want to buy, which is 98. I know there's a lot of other people sitting out there to buy there. It just makes sense to buy around there. And that's what gold is doing. Here's what silver is doing. Ticker symbol SLV. And the 100 simple moving average on the weekly on silver is 1625. The chief technology officer of Real Life Trading has himself a covered call at $15 for February. Covered call, Albert Feb. And he's been in that one for a little bit. Just dollar cost averaging his way down. There you go. So SLV up in there probably will expire worthless, and I'm assuming that he'll likely just turn it right around and do that one more again. So there's silver, gold, TLT, done. Goldman Sachs, ticker symbol GS, Goldman Sachs. Pretty sweet name if you ask me. Sachs of Gold. Man, guys, I'm telling you. I don't know if head and shoulder patterns work. But if they do, that's a big one right there. It's almost too pretty. That's why I'm a little hesitant, but I mean, look at that. Look at that neckline. Ooh. Goldman Sachs. So there's here's what's gonna be interesting, guys. This retest is gonna be unique to play. And again, if we're gonna go bullish on a lot of these things that have broken down supports, which I'm fine with, just make it very short term. If head and shoulders are accurate, if trading the market based on those works, the retest is going to be ugly. I've mentioned that a few times in just previous conversations we've all had together. That if we do enter a bearish market, the retest is going to be hideous. It's going to cause some people to lose money. It's going to be a little bit of a rough time for some aggressive traders. But when we start retracing a little bit, we'll see if we can slowly just add on up there and kind of see what happens. So that's going to be kind of my plan. And I think that it's not gonna trade just perfectly into the resistance and rollover. It's not going to do that. Kind of like take a screenshot of 2008. It would do something like this, where it goes up into that trend line and just does like a lot of this, something of that nature, and you just kind of have to hold in through that area. And maybe use some protective calls or protective puts rather than some stops up there, just in case we're wrong. And if it goes higher and the market just goes an all-time high, great. We mitigate our risk, but we don't get stopped out or whipsawed out by using some protective options. So that's probably what I'm gonna do. I'm gonna implement, because I'm not fully sold on this bullish move because a lot of the indices out there are diverging. There's a lot of things breaking down, and I'm fine if the market goes bullish. I'm cool with that, and I hope it does for a lot of the investors out there. I really hope it goes strongly bullish, and I'm going to keep buying dips. And I suggest anyone who's under 60 to probably keep doing the same thing. But if you have a really, really big nest egg, just kind of keep an eye out on what it's vested in, and just keep in mind cash is king at the highs, and be in cash at the lows so that you can buy things. Just something to keep in mind. If you have a bigger account, big solid IRA or 401k or nest egg from a totally non-licensed opinion, anytime you get into really, really high volatile markets like this is the time to lock in profits, sit in cash for a while, again with a bigger account, and don't try to ride this down. If you're 27 or 42 or whatever, buy protective options, or buy inverse ETFs, or just protect the account, because you're 40. you're going to live another while to hold through the rest. If you want to be in cash, you can. There's nothing wrong with that. But again, the compounding interest and just the longer term accounts, that's the thing. Long term accounts I very rarely trade, especially if you're younger, if you're a younger person. Just don't actively trade them. Just let the compounding interest grow. Because I had a buddy of mine, he's like, I don't know, what, 29? He's like, dude, I got $12,000 in my IRA. What do you think I should do with the market? I'm like, you have $12,000, dude. $12,000? You kidding me? Keep putting money in there. Call me when it's 2.3 million and we'll chat. 12 grand, I know it seems like a lot, but it's not. Keep adding money. You're young. That was my advice. Anyway, just my random rant for the moment. Goldman Sachs, though. I'm gonna do another warning. Why not? I mean, it's. Let me draw this retest because here's what I want to happen on the retest. Boom, 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 boom. Here's what I think the retest will look like. We plan to hop in and join the fun on the bear move, but will likely use protective options to avoid whipsaws. Goldman Sachs, head and shoulders. Interesting pattern. I see it. We will find out what transpires. What do you guys take on the Japan negative interest rate? You guys are kind of quiet today. Is that a bad thing or a good thing? The market really was rallying hard today, but I don't know. Not sure. I just don't think that's good. It's like, hello, yes, you can put money in the bank. No, yes, we're going to charge you for that. Thank you. Yeah. Yeah, we're going to charge you. All right. There we go. JP Morgan. JP Morgan. Also, really interesting level, right? I know some of you are thinking, man, it was almost like a double top. Kind of. I mean, it's... And this will be the retest. But again, I don't think it's just going to roll over just cleanly right at that resistance. It's going to get ugly. If it's going to retest, it's going to get a little rough. If we're going to break through some of that action first, could maybe even form a triple top. I don't have anything on JP Morgan. I mean, truly, if we roll back up to here and do this, I'm not going to be that crazy shocked. But if we do make it back up to these highs on any financials or any stocks, I will be potentially looking to short up there. It depends on how much bullish movement we get into that action. So if we really, really move strongly bullish, we'll see. But so far, the January sell-off that we've had on most things, we've retraced about 50% of that. So if we're going to roll over, it needs to happen next week, just soon. Like if we're going to have a bearish move, if it's going to happen, needs to happen very quickly. Same thing I said about the bullish move. Now that the bullish move is happening, if we're going to move bearish, it needs to happen soon. Otherwise, we're going to keep retracing a little bit, and that's going to be some retests on a lot of things. Chris Tom making an appearance. What's up, brother? Glad to have you here, man. Let's go check out American Express. Here it is, AXP. American Express. And this is another one that's really interesting. Let's go over to a weekly chart and check this one out. And this is one of the few that is already underway of the breakdown. I mean, that's Guys, that's a big deal at American Express. No, not a lot of people are talking about AXP right now for some strange reason, but man, look at that. Almost a straight drop. So, on American Express, thinking it's going to pause here. That's what I would at least like to see. Can we bounce here? Absolutely. We're at a really good support. But you've broken this primary trend right in there. That's broken down. You got this ugly distribution pattern up there. This is a bearish public participation phase. And there's going to be a need in an accumulation phase at some point. Something like this would be great. Boom, boom. And then I'm fine with either direction, bullish or bearish from there. That would be fine for me. I mean, it could take the better part of 6 months. So I don't really have an exact trade on American Express at the moment, but I'm not specifically bullish on it yet, at least not right now. These gaps are bearish. The day trades have been working bearish. Today we have a little bit of a small gap. This looks like a kind of a healthy rollover. And so if we get something like this, again, I'm looking for that kind of pattern on American Express for a while. Stan says that broke when Costco dropped American Express. I bet, man. I bet it did. That and the higher rates charged to merchants from American Express is an issue. It's going to be a thing. So anyway, interesting to see how it plays out. Don't have an exact trade on it yet, but at this particular point in time, I'm semi-expecting something to trade sideways a little bit at that level. Costco has not had earnings yet. It's going to be a while for Costco. This was just like again, kind of a really quick move. Last time I was looking at it, no money in bear call spreads, so probably a good thing I didn't get in. Very interesting gaps right here. I mean, so you got a gap action on the November 16th, and you got another gap action right there on January 8th. What's Costco going to do? Kind of like everything else out there, you have some really solid bullish volume. Everything absolutely has no problem bouncing, but there are a lot of things out there that need a retest and really, really do need a rollover. So on Costco, here's your long-term moving averages on Costco, and we're stuck smack dab in the middle of the 100-200. So it could continue to do this. If you're looking to do a bull put spread, you can maybe do that and then leg into a bear call spread on Costco, kind of iron condor that bad boy. Rusty bird it. Could rusty bird it a little bit. And then go from there. So anyway, really interesting little pattern of the being between the 100 and the 200. So yeah, if there's money, it would be interesting. American Airlines, what's your plan on this one, Chris? Had a really good support. A lot of airlines kind of coming into a little bit of a support today, and definitely trading sideways, going pretty good. Earnings has now occurred. Where's your spread on this bad boy? American Airlines, maybe for February. 36 bull put. Nice, dude. Very nice. Next week. Woo! Right on. 30. Let me hop back down here. What's the low? So you got close. You got close, but depending on when you got in, I don't know exactly when you got in, but it's a great level. What's the low of this candle? 34.10. What's the 34.33 for August paying? 34.33 is paying 22.15, 7 cents. Nothing. It's not that great. 35.34 is paying 7, 8 cents. Maybe 9. 36.35 is paying a little bit better. 48 and 33, so about 15 cents. That's for February. We've done a few put sales on American Airlines. I'm actually kind of considering the 34. 34 for 20 cents February. I could get behind that. I'm just going to do it naked. Put sale. We've done many of these, but yeah, I think your bull put spread will be just fine. 34, and that is February. 23 cents. And publish idea. American Airlines put sale. AAL at a very strong support. Chris Tom has a 36 bull put spread expiring next week. AAL also in a channel. Decent volume coming in. And I like the candles. Hoping for a bullish pop. I'm neutral to bullish pop or sideways move. I'll buy to close this put sale if it becomes more than 70% profitable with more than 2 weeks left. So 23-cent limit on American Airlines. I don't know if we'll get filled on that, but I was kind of wanting to do the same thing on Southwest, but there was no premium down there, and that concerned me. A little unique. Okay, so it's going to be a 34 for next week. Credit spreads. I got to see what that one filled at. 129, 2016. American Airlines. 34, 23, February 19th. And I don't know yet. Oh, short call. Sorry, it's a short put. 34. Okay. And again, I have no idea if that's going to fill or what that'll fill at. Right on. American Airlines done. Next, Google. Google. Here we go. Google's going to have earnings pretty soon, and like Amazon, had a really good bullish candle yesterday and made a higher high and a higher low today. So, no idea what's going to happen on Google, but if it gaps below here, I'm bearish. If it gaps above here, I'm bullish, but expecting a pullback. And everywhere else is going to be Yawnville. So, gapping up here, I will be bullish. Gapping down here, I will be bearish. Publish idea. Google analysis. Google analysis, pre-earnings. This gap could be fun. If Google takes out the all-time high, I will be bullish, but I'll expect a retest if Google opens down. Let me put that in parentheses. Opens in the green zone. Gaps down in the red zone. I will be bearish. Perhaps a G had unraveled covered call for Google Day. A covered call at 740. 740. All right. So you're still in shares. Very nice. Rob Ying. Still in shares. Right on, man. Nice 2 candles coming in. So there we go. Google, real life trading. That's my plans on earnings. I have no idea what it's going to do, but we will see. It's going to be a fun event, kind of like Amazon had a nice little gap. Unfortunately, I only paid 90 cents per share. Nice, man. Good. That is fortunate. Very. All right. There's Alphabet. Google. There's the earnings we'll see what happens on that one. That's it for the list. Monday is Merchant. I'm sorry. Well, kind of Merchant Monday. We'll look at a few, but it's specifically Mentorship Monday. Is there anything else you guys want to talk about on Monday specifically? I'll be looking at GILD and ExxonMobil. Those have earnings coming up pretty soon. Was there anything you guys want to talk about on Monday? Any kind of topic, anything specifically for the newer traders out there? I haven't done a really solid trader psychology session. Let's do a trader. I'm not going to do a lot of charts. Let's just do trader psychology. Let's just talk and chatter all day about what is psychology. Let's do that. That'll be fun. 2 stocks. That's what we're looking at. And then trader psychology. Yeah. You can do it. That'll be fun. That'll be Monday. In the meantime, let's go look at a few others. Hawaiian Airlines was another one we took a peek at yesterday. So Hawaiian Airlines has retested. So this is a retest gap. White candle, gapped up, retested. Yesterday we looked for a bearish break. It did break bearish really quickly for about an hour or so early this morning, and then traded into some support. So here's your exponential moving averages on support. Hawaiian Airlines, I like that little setup right there. It's a 1-to-1 by this high, and it's definitely a 1-to-2 by the all-time high on Hawaiian Airlines. Considering it making it official, it'll be one of the first bullish swing trades we've had in a while. Here's the long-term moving averages. We're above those. Looks pretty solid. Here's the hourly chart. Hourly chart. I would make this, again, trigger intraday, but it would be a stop limit buy. All right, so you don't want to. So if it gaps up, you don't want it to trade the pullback. Nice little double bottom. Let's make that. Let's look at that in February, Tuesday. I'll look at Hawaiian Airlines on Tuesday. We might get a chance to buy the pullback. I'll also look at it on Thursday. It is on my watch list, though. If we can get 2 days of rest and then we trigger, I'll take that for sure. That's starting to build some pressure, and I'm starting to like it. MTW, Manawa. This had a really good gap today, and you do have some lower highs. So here's the long-term moving averages on MTW. The 200 absolutely could become an issue. 200 simple moving average is 1703. I like this candle. I like the gap. I would simply say I would be more bullish than bearish if it broke above the high of today, and my stop would probably go below the low of today. Only main issue is you got the 200 simple moving average right in your face. Risk reward, not that fantastic. Could be a good paper trade just to practice if anyone wants to practice out there. But you got some really solid resistance right there. Risk reward is pretty much the main reason I'm not making that trade official, but I do like it. It does look relatively pretty, and it should be somewhat interesting to see how it plays out. Starbucks, ticker symbol SBUX, had a nice little gap today. This one might be worth watching on your bullish list as well. Also took out the high of the 113 candle. It is a retest gap, and I like the retest gap. SBUX, bullish retest gap off of the 100 SMA and above daily EMAs. Therefore, edge is slightly bullish on Starbucks. You do have that little trend line kind of coming down. We did close above that trend line. Not saying that that's absolutely going to be reason for it to go higher, but it makes sense for me, or to me, that that would likely occur if it kind of broke that level. So pull back, maybe kind of some kind of limit buy, and take it from there. Ladies and gentlemen, I'm excited to see you guys on Mentorship Monday, and probably a few new traders will be joining us between now and then. We normally get 1 or 2 signed up on that Monday, and that's why we do it. Make it simple, go through some talking points, refresh what it means to be a real-life trader, get us all jazzed up and excited for the rest of the month. Ladies and gentlemen, boys and girls from around the world, it's been an absolute treat, pleasure, honor, and privilege to trade with you guys this month and this week and today specifically. I love you guys. Have an amazing weekend. If you need anything, you know where to find me. And until then, remember, love life, live life, and trade it. I'll see you guys later. Bye.